Welcome to the CoinRock Show. Well, we haven't seen green in a few months now. Look at this. Look at these. Look at these numbers. Let's have a look here. Even ETH is pumping. I think. Gainsey sent ETH. What a great run by Gainsey. Gainsey is a very well-known figure on crypto Twitter, an OG of the space. And if you haven't seen his rant about ETH, just go to Twitter and type in. Let's have a look if we can do this actually. Uh, let's. I don't know if I can pull this up. Video. It won't play the sound, but go to Twitter and type in Gainsey, Gainzy ETH. I mean, just type in Gainsey, you'll see. And you know his love for Ethereum. So that was actually a pretty epic rant. But look, ETH is up 7% today. We haven't seen that in, I haven't looked at the charts, probably what, a few weeks or months. Let me just have a look at the audio. Audio should be okay. Welcome, everyone. We will be together. Yeah, we're good. So for about 20-30 minutes now, I'll look at some of the headlines. And then we will be joined by Julian, a guest of today's CoinRock Show. Let's push this out to all the groups. You know how it works. It's always a bit, the algorithm is always a bit slow. Always takes about, actually sometimes up to an hour to kind of reach wider distribution on socials. So welcome. Let's have a look at some of the news here. So green, are we back? Are we back? Is this the beginning of, is this it? Is this the next leg up? Remember I talked about the relief bounce. I mean, over the last few weeks, and again, you see a lot of people on Twitter saying like, calling the next leg up, etc. I've been keeping it very real. I was at dinner yesterday, talked with a very good friend about just being real with you guys, with viewers and attendees and listeners, instead of flip-flopping. So we talked about the fact that this cycle, it's interesting because you have very large Twitter accounts who just have been completely wrong for months, completely wrong, flip-flopping, almost embarrassing. Not that they're bad guys, but just you expect better from them. Huge, like large accounts, 500,000 plus followers on Twitter. Real followers, probably some bots too, but you expect them to have some sort of understanding of the market. And it's been just to show like how difficult to play and to predict, forecast this market has been. Many of them just have been flip-flopping from bullish to bearish overnight for no reason. I have tried to give you guys the same, just kind of the view that I have, which hasn't changed. I said this in November. I tweeted about it. It's pinned. I said that we revisit mid 80s. We actually dropped under the 80K mark for Bitcoin, and then we send. And then in January, February, we talked a lot about the fact that there's no, in the short term, right, going back 4 or 5 months now, there was no bullish catalyst. That's the truth, right? And so, I know even some of my good friends slash contacts slash acquaintances in this space, like, oh no, this is bullish, man. Next leg up. I'm like, no, bro, no next leg up. And they said this in January, February, March, and they were like, oh, you're bearish. It's like, no, I'm not bearish. I said choppy, bearish, sideways for the short term. I said this in January, February, and that's exactly what happened. And I also said, I wrote an article called the Kingmaker Trade, right? I said it's going to be, we live, you trade in a Trump-dependent market. weeks before the press even picked up on it, picked up on the idea that, Trump is the KOL here for everything. Forget about crypto. Trump is the world leading KOL for everything: business, war, peace. Everything he tweets gets picked up, and so, let's look at the numbers here. 99K. We crossed 100K yesterday with Bitcoin, right? ETH almost at 2K. I don't know if it popped above 2K. Very, very bullish for ETH. If you're just joining and you haven't seen the Gainsey rant about ETH, please do have a look. Check it out. It's on Twitter. It's very good. And the thing is, look, I've been bullish ETH for a long time. You guys hear me, right? And the beautiful thing about not being a KOL is that I can actually tell you the truth. I can tell you what I think without needing to shill a coin, right? I don't even talk about the CoinRock coins. I've been bullish ETH for a while now, and I said, even on definitely to off the record, offline for sure, but even online, I'm pretty sure I said that the way the ETH Foundation has been running things is catastrophic. No direction, no consistency in the messaging. One of the things that I do believe, and one of my viewpoints in crypto, is that everything is a meme, including Bitcoin. The Bitcoin, the maxis coined the idea of digital gold. I mean, it's a meme, right? There's nothing, like, if you take a step back and you actually look at this. Let's say you're an alien, right, landing on Earth. You're like, what is this Bitcoin thing? And someone says it's digital gold. And if you take a step back outside of this crypto bubble, or this small bubble, not that crypto is a bubble, separate conversation, but this echo chamber, like, wait, hang on, what do you mean gold? Is this, do they mine gold? No. So do you use gold to produce Bitcoin? No. Does Bitcoin create gold? No. So why digital gold? Well, just because maxis woke up one day and were like, you know what? Finite number. This is the most beautiful and clean asset because you can't make any more. Let's just coin it digital gold. Look, everyone here who wants crypto to do well, you have to like Bitcoin. Simple as that. Without Bitcoin, there is nothing else. And so, that being said, everything is a meme, right? There's no rational reason aside from the brainwashing and the propaganda done, thankfully, well done by the maxis years ago. And gold is gold, right? You mine it, you hold it, you can bury it, you can transport it. Bitcoin has very different qualities and amazing qualities, but just different. So is it gold, digital gold? I mean, it's a great meme. So coming back to the meme idea, right? ETH has been, and I talked about this with old school ETH ICO buyers, those who actually bought the ICO and still hold mountains of ETH. And everyone agrees with the idea and the fact that ETH has had no clear messaging, no clear branding, no clear big idea, what we call in marketing a big idea, right? Bitcoin is digital gold. That's a big idea, right? That's what the brain understands. What is ETH? It's been a few things. It's been too many things. And so that's why when it comes to branding, again, my background is all marketing, branding, advertising. When you take a step back and like, what is ETH? Well, it's been pitched and shilled as the Apple Store, or the App Store. The App Store, the blockchain App Store, where you can build, the same way you could build apps, you can build dApps on ETH. I think that's pretty good. Then we also heard it's basically like silver. If Bitcoin is gold, ETH is silver. Okay. Then we also heard there was the ultrasound money phase. Okay. Then it's been, now of course is the ETFs. So now again, and this is me being bullish. I'm an ETH bull. I just think that the way everything has been run is extremely chaotic. And I agree with Gainsey that it's been in many respects very much a joke the way things are run, especially when you see just the issues just on the usability side from a normie perspective. Someone coming into the space and saying like, okay, let me use ETH versus let me use Solana. Just the UX UI, the experience as a user, as a first time user, talk about onboarding the masses, right? I mean, Solana just won, simple as that. You know, you can hate Sol. I'm bullish on both. I think it's very limited to only be bearish on only be bullish on one asset. I think that you can be bullish on many projects, coins. So I'm bullish on both ETH and Sol for different reasons. I just think that ETH has done such a horrendous job. When I say ETH, it's the Ethereum Foundation, all the guys who have, who've been either at the foundation or with the foundation, or the very vocal ETH KOLs, engineers, devs, and KOLs too. And it's been horrendous. It's been very poorly managed from a communication standpoint. So it's like price action, of course, has suffered. And of course you see, so on one end of the spectrum, price action has been horrendous. That being said, I stay and I have stayed and I am hyper ultra giga bullish ETH. Does it go to 20K? Probably not. Like, not this cycle. Does it rip at some point? Yes. And this is not ripping. Like 7% on the day is nothing. Like ETH, when ETH wants to send, you'll see. If you're new to crypto, you'll see when ETH wants to send. Go back to, well, pull up the monthly and have a look. You know, it'll rip 20, 30, 40% on the month for several months in a row. And then you're like, holy shit, ETH moves. Yes, it will move. I'm firmly, as much as pathetic as price action and communication and work by the ETH Foundation has been, I'm very bullish on Ethereum. Mainly because, of course, ETFs, yes. I mean, ETFs are, you could argue that ETFs are not bullish, but mainly because the buyer, the ETH buyer, when I talk to people, and we've had guests on the show, you know this, right? When some of the guests who are really deep into some more on the institutional side, meaning they talk to banks, they talk to family offices, they talk to funds, pension funds. There's only two assets of on the radar for, let's call it the TradFi kind of the skeptical TradFi organizations that need to allocate now to crypto. It's number one, Bitcoin, of course, and ETH. That's it. And so Solana today is not, of course, some crypto-friendly funds. You might look at Solana, but when you talk about like the big guys, right, the ones who deploy tens of millions, hundreds of millions, and buy assets, it's Bitcoin number one and ETH number two. And for that reason, sometimes, so there's a lot of ways to invest and a lot of ways to think about what you invest in. Sometimes it's not about the asset itself. It's about who is buying the asset in question. And so Ethereum is going to be around, right? Is it going to be around in 20 years? No one knows. It's going to be around for a few years, for sure. I mean, it's crypto, so NFA, but it's one of those. It's number two. It's going to be around. Is it going to go to 20K this cycle? Probably not. Is it going to pump? Yes. It's going to rip? Yes. It's going to rip. Is it going to rip at the the most unexpected time. Yes, always does. So the bull case for ETH is not just about what ETH is. It has massive issues, right? The gas issue, like just the onboarding, MetaMask. I mean, it's so unfriendly. That being said, look who's buying. Look who's buying ETH. You know, those like the funds, the BlackRocks of the world, they don't buy these assets. They don't buy assets for to to get out in a day, right? They're not here to scalp. So they have a very long time horizon. And if you've been following these shows, we talked about this. We bring you amazing guests to shift your perspective, right? If you're a trench warrior, you need to get out of the trenches every now and then and actually think and understand kind of what's happening in the space outside of the trenches. So deploying money when pension funds, when banks, when the big money players deploy money, it takes them between 6 to 18, sometimes 24 months. And like I said, they're not buying coin number 82 on CoinGecko, right? They're buying Bitcoin and ETH. As of today, some of the more crypto-friendly funds, yes, might be interested and are interested in. They go down the list here, right? So XRP, maybe Solana, a lot of interest. But at the same time, those who are not super crypto friendly but need to allocate, it's Bitcoin and ETH. That's it. And so even if you hate ETH, make no mistake, it will rip. And so that's it. That's it. That's my and I've said this for months now. 7% on the day, I mean, good, but again, we've seen ETH rip 10, 15% when things heat up. So, I'm very curious to see how this does. This is looking much better now. You can even feel the vibe. So what's interesting this cycle is, I had dinner yesterday with some good friends, talked about the differences with this cycle. So what's interesting with this cycle is, here's some alpha, is how disconnected retail is. So retail / normies / and many of you watching this, you are retail, right? Which is fine. Versus institutions. And so when you go to these events, when you go to the conferences, right? Bitcoin Vegas, I think, is in 2-3 weeks. When you talk to the to fund managers, to institutions, they're extremely bullish on crypto. When you talk to retail over the last few weeks and months, it's like it's like fallout. Dead. Everything's dead. The timeline's dead. Everyone's skeptical and bearish. People left. Up to a few days ago, I mean, the timeline's dead. And so now it's interesting to see the discrepancy. And I wrote about this a few months ago, actually, the difference between how bullish and how interested the money players are, right? So let's call them the institutions, and how bearish and wrecked retail is. So I'm very, very excited to see how the market shapes up and how things look like once we have more retail euphoria. And if you have retail first coins, meaning if you have anything outside of the top 10, you want to see that. Like, you want and you need to see retail coming back and more interest. And interest has been non-existent over the last few months. So this to me is this is interesting. It's something to pay attention to. Is it one where it's like, oh my God, we're back? I don't know. We'll see. I think we talked about this, right? This fundamental problems that have not been solved yet in the US. We don't have time to go through all the headlines that I pulled up, but let's have a look at this one. Yeah. So Bitcoin briefly passed the 100K threshold, right? This was yesterday. The price jumped. The price jump followed geopolitical signals where Trump hinted at a major trade deal and the U.S. Treasury prepared to initiate de-escalation talks with China. That's it. We talked about this for weeks, months actually now. As soon as the market sees not even more certainty, but that's how bad it's been, but less uncertainty, things just go up. It's sad sometimes how retarded this is. Trump tweets and hints at, oh, big partner, big news. Oh, yeah. And you can see this over the last week or two, right? China saying, hey, we're not budging here. And Trump, let's call it, let's say it, Trump flip-flopping. Simple as that. Saying, oh, well, we might be open to this. We might, and then Bessent going on TV and saying, this is not really sustainable. So kind of opening that loop of, or opening the door of, hey, we might have to kind of walk back these tariff ideas. So that's been kind of so this is not new. Like this is new, of course, but this is not unexpected. This is very interesting. And just look at the price action here, right? So a week ago, we were probably like low 90s. And now yesterday, 100K Bitcoin, ETH at 2K. And just based on the hope that, there would be the hope of actually a trade agreement, or at least, like I said, forget about having full certainty. The thing is with Trump is Trump likes uncertainty. That's been his game for decades. You have to study Trump's psychology. He always leads the media. Anything he says, he knows how to inject, and this is from his TV days. Remember, he was, how Bane, what's that phrase that Bane says in Batman? He says, he was like born in the darkness, right? Or forged in the darkness. Trump was born in a good situation in the US, of course. But then he knows how to play the media. He's been in the media for decades. He knows how they react. He knows how to play them. And so if you look at his MO, he always leads the media. Best example recently is like when he said the other day that he thinks he would be an ideal candidate to be the next pope. Of course, he doesn't think that. But what happens the moment he says that? Everyone tweets about it. It's on CNN. It's on Fox. It's on the left wing, news media, right wing. Europe freaks out because like, oh my God, Trump says this. It's like, but that's the game. That's the game he plays. He leads the media. And then he takes credit when it goes well, or he blames, or he just kind of disregards. So he's a master at this. And so when it comes to your bags, because ultimately you're here for your bags, right? So look, the moment, and we talked about this over the last few months, the moment there's less fear, less uncertainty, forget about having full certainty. We will never have full certainty with Trump. That's not the game he plays. As long as there's less uncertainty, things will go up. Simple as that. And it's that over the last few months too, it's that classic case of having like that at volleyball that you're in a swimming pool, you push the volleyball down. At some point, it's going to shoot back up. This is what we're starting to see. So the relief bounce I talked about over the last few weeks, this is it, in the sense that it's the market seeing that there's less uncertainty, maybe the beginning of an agreement between the US, China, maybe Europe. Are we back? It depends on what the announcement is now. Again, everything depends on Trump and the US. That's it. Simple as that. I was at a few events last week, also with some, very crypto native guys, and also not crypto native, but extremely TradFi and macro oriented guys. And this conversation comes up all the time. It's like, what do you think? It's like, well, it's Trump. That's it. Simple as that. Everything that's happening in your Phantom wallets, in your MetaMask account, is all due and because of Trump, good and or bad. So we'll see. This could spark the next leg up, maybe at least a relief bounce. Right now, it's very difficult, and again, be careful who you follow and watch on YouTube. Everyone wants attention. Everyone wants clicks and views. Oh my God, this is back. This is flying to 200K, maybe. But right now, look, interest rates. Yesterday, the Fed said basically nothing, right? We won't have time to cover a bunch of stuff here. If Fed maintains interest rates and basically nothing yesterday. So this is something that I see this as very bullish, though. If the market behaves like yesterday and today, and we don't even have any bullish news coming from the Fed, what do you think happens when we have bullish news from the Fed? That's what a lot of us are waiting for, right? It's not just the tariffs. Tariffs could spark, yes, and might be sparking now the relief bounce. But interest rates, some good news around this, some good news around the U.S. debt. That, yes, could really pave the way and trigger the next major bull run, major leg up. But again, today it's a bit too early. So I'm here to make you think differently than what you might be seeing on your timeline. When everyone was wrecked and dead a few days or weeks or months ago, we were here giving you, our take on, we don't think it's as bad as people think. And so I hope you survived. And now looking at this, I'm cautiously optimistic. And so that's my take on what's been happening over the last 24 hours. Cautiously optimistic. Let's see what it's very easy. So if you want to long here, if you're trading it, you're basically gambling, because you don't know what, if Trump comes out today with a tweet saying, oh, well, we might be pushing back the bullish announcements, not to today. I think it was today or tomorrow that they're making this. He announced a big announcement in a very Trump way. If he says, hey, after all, it's going to be a few weeks out, we're dumping that second, right? So again, cautiously optimistic. This is looking good, but also, do you want to be longing on a green candle? Maybe. I wouldn't. Do you want to be longing when there's max fear, like in the last 7 to 14 days? Yeah, I mean, of course. Again, it's a very difficult cycle to trade, even for very experienced traders. But right now, I am cautiously optimistic. I want to see more. Very curious to see what comes up in the next 1 to 3 days. Forget the next 1 to 3 weeks or 1 to 3 months. Trump is so proactive in the way he communicates that we'll see something today and tomorrow, between today and tomorrow. So, with that being said, let me ping the team here. Countdown in 5 minutes. Countdown 5 minutes. I will take a quick break. Starting in 5 minutes. All right, so we'll take a quick 5-minute break, and then, and then, the fuck? There you go. Quick 5-minute break, and then we will be joined by Julian. Talk about DePINed, talk about AI, he's also an entrepreneur, so it's going to be a cool conversation, I really enjoy talking to entrepreneurs because everyone has a different view. I say this often. Crypto is not my I'm not crypto native. I am literally a Web 1 and Web 2 entrepreneur outside of crypto. Crypto is something that we started CoinRock about a year and 5 months ago now. So talking to other entrepreneurs who've done interesting things and done well outside of this space is also very interesting. So let's take a quick break, and we will be back in. Share this with others in the groups, and we will take a quick break now, and we will be back in exactly 4 minutes for the show, and we'll go on for about 40 minutes with Julian on. Hey, Matthias here, and if you're enjoying this and want access to even more alpha, early stage deals and opportunities, and also behind the scenes insights on the markets, hit the link in the description and make sure you're subscribed. It's free and it puts you ahead of the curve. Let's get back to the show. Welcome, Julian, to the show. Yeah, we always do like a pre-show just to kind of warm up the room. And on today's show, let me just have a look here. Just put some comments. One thing I will say just before we get into it, it's funny to see that we've had like a bullish last 24, 48 hours. And of course, the attendance is up, right? It's so, when it comes to crypto, it's just, it's so dependent. Like views are just so directly correlated to price action. So with that being said, welcome, Julian, to the show. Very interesting journey that you've had when it comes to building on the entrepreneurship side, and now, of course, in Web3 with DePINed. I hope I pronounced it correctly. And the floor is yours. Just go ahead. Tell us who you are, what you've done, and what you do.
Yeah, appreciate the introduction. So my name is Julian. I'm the CEO and founder of DePINed. I guess to get started about my background a little bit, I started off as a kid who was a dreamer, and I started very unconventionally, being that I actually grew up in Canada in a place called Newfoundland, which is like a very, very small place. It's like the most easterly point of Canada because I
It's
grew
what
up
you see when you fly in through Europe and you look at the screen.
Yeah. So like it's actually one of the oldest places in Canada, which is why it's called Newfoundland.
Yeah.
But no one wanted to stay. They all left it into other areas of the continent, etc. But so I mean, my journey kind of started off as a product person. I how I got started into entrepreneurship was I faked my first idea. I always wanted to become an entrepreneur and kind of create something. I think mainly because I had ADHD, so like I just could not sit still with something. Like I had to be always something that was like kind of fresh, something that was like there was a challenge, something that was unknown, and like would actually get me out of bed to like work on it.
Like every real entrepreneur, 100%.
Yeah, it's like it's I mean I don't want to say it's like a mental illness or like that, but like like it just you just get drawn to it, right?
Yeah. Ideas are never the issue.
Ideas are never the issue. I got too many damn ideas. It's more so actually there's a fine point in which you're an idea person, but what distinguishes I guess like a really good founder is that they're also able to build the execution skills. And it's thus having the balance or like the synergy or the yin and yang of both, right? Because yes, you come up with a lot of ideas, but the issue there as well is that you may not have the executional skills or the experience to actually realize those ideas, right? But then
what was the first idea, by the way, that you said?
I had many. Like I was like the kid that was like 14. I was like still in junior high or high school and have all these ideas, and I'd run to my mom and my dad and be like, oh my God, I have this idea, it's gonna change the world. And they'd be like, what are you talking about? You're 16. You don't even know what like but then actually what I tell people, because it's not always good to actually tell your ideas to those you love or your parents, or even though you do feel like you have a high respect for them. It's that they haven't done that journey before, right? And actually it can affect people in their journey, because obviously with someone that you have high regard towards tells you like that's really hard to do. That's blah 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 blah. That sets limitations on you.
Yep.
But it's not their fault, right? You should
Yep.
be. So,
You
not sure
just
if I'm.
dropped off for a sec. You said you should be.
You should be looking for people or like that have done that journey before, right?
Yep.
And
Yep.
that's kind of the things why having a mentor is really really important, or
Yep.
even as well like your circle, right?
Yep.
The people you hang with, they say like if you hang out with 4 people, the 5th person's going to be the exact same,
Yep.
and that's actually something really difficult for a lot of people who grew up in cities that are not entrepreneurial. It was like that's that stupid saying, whereas you can't, I don't know, what does it make a fish climb a tree, right? Like
Yep.
you feel weird in the situations that you might feel like an outsider or like a like a weirdo in the groups that you grow up in, and then boom, you go somewhere else and then you're like the
Yep.
most normal person there, and then you're like, holy crap, actually other people are more crazier than I am. And
Yep.
like I just came back from Dubai from Token 2049, and like, holy cow, you're meeting the craziest dudes and you're like,
Yep.
this guy exists, like that's wild, right?
Yep.
And yeah.
What was the first successful venture? The one that showed you that you,
Yeah.
because everyone wants to be an entrepreneur, right? I was an entrepreneur too. I mean, but I was not. I mean, I'm still an entrepreneur, but I was an entrepreneur when it wasn't cool to be an entrepreneur. It was always like being like, okay, this recluse kind of strange career path that you're going down, especially in a country coming from Switzerland, where everything is so everything. You can have an amazing life, amazing salary, just being an employee, working for a good bank, a good insurance company. So what
Yeah.
was the first win for you that made you realize that, oh, this is not just an idea, like I'm actually good at this, I can do this?
Yeah, so I mean, going back to that idea, like my first like the idea that I faked was like I always come up with these ideas that would come true. And when I joined that accelerator program, I just watched a YouTube video and I was like, how to pitch, how to build a UI, and it was like the crappiest thing ever. And it was actually adding all text applications into one. I went to the accelerator, and like, man, I got these mentors, and one dude, man, like he just wrecked me, man. Like he was like, "This is the stupidest idea." Blah, blah, blah. I was like, man,
One
like
of the judges or one of the panelists?
they had like these, I guess, like veteran
Yeah.
entrepreneurs that didn't really make it, but they became mentors.
Yep.
And like he just destroyed my confidence. Like, man, I'm coming here, and they are also like tearing you down. Like, I don't know if this is for me. But then basically from there, I kind of took a pause from it. I went to do product management in California, and that's actually when I was in an environment. And it's actually not like there's a difference between an intrapreneur and an entrepreneur.
Yep.
Basically,
Explain it basically for those who don't know. Explain, how do you see it?
So an entrepreneur is someone like I see as like on the outside of an organization. So you're actually now like everything's dependent on you, right? Like you're the leader, you're the pusher. You shouldn't care what anyone thinks. Like it dies or lives with you. Whereas an entrepreneur is someone who's an entrepreneur basically, but in an organization, right? Because everyone is creative in their own different ways. It's just that whether or not you have the weight of the organization on you, right? Whereas if you're working at Google or blah, 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 you can be your own entrepreneur as well. You're figuring out ways how to improve processes, how to introduce ideas, how to lead your team. It's the exact same thing. You just don't have the stress of that. And that's not a big deal. It's actually that some people in their life journey, I always say this actually, because I wrote an article about, I call it trauma founder fit, just like product market fit. There's and trauma doesn't have to be a bad or a good thing. It's more of a state of change or what someone has gone through. And basically someone who could be a founder, like literally today, to actually be able to do that entrepreneurial journey and just like right off the bat be like, okay, wow, this is like normal, because they were raised in an environment in which they couldn't control things. They maybe didn't have food on the table, and like that's an everyday life for them, like literally living that life for them, like growing up to this specific point. Nothing has changed, right? Versus somebody who maybe didn't have those situations in which grew those skill sets, right? So that just means that there's a difference in where you're starting off,
Yep.
right? In that entrepreneur journey in terms of what makes you a founder, which is why I call it trauma founder fit, because it takes the random. I think I'm dropping off there again.
Yep. Yeah. You said things.
It takes a specific amount of like situational trauma with the right person to actually make the right perfect person at this specific time, which is really cool, actually, if you think about that. So yeah, so then that's basically how once I became an entrepreneur, I was in an environment that allowed me. Am I so lagged?
Yeah. No. You're good. Environment that allowed you to.
Let me try. Yeah, let me try to just switch my Wi-Fi for a second. Just give me 1 second.
That's fine. In the meantime, yeah. So this is a cool conversation already. It's very different to, some of the other ones that we've had recently in terms of like pure crypto and macro or or marketing. So this is the journey of entrepreneurship. Julian, when you're back, just go ahead.
Yes, there we go. Yeah. So
Okay.
going back to that, is that once you're actually able to kind of like it's the same thing as like having training wheels, right? So once I was able to have the training wheels and given ownership, because I was kind of like a product owner, it allowed me to actually now like test my theories, push my team, and all the small kind of micro skill sets that require you to be a founder. And I loved it. I was like, wow, this is amazing. And from there, that's like how it's kind of just steamrolled. I then created. I was like, you know what? I'm going to make another try at this. I created a company called SkyTop, which is basically I created a Raspberry Pi, and I created a cloud system, kind of a virtual PC, and I streamed it because I met a guy there called Gary Tan, and he told me, if you want to make wealth, it's not about creating the next narrative or this or that. It's about impacting 1 million people's lives. If you can impact 1 million people's lives in either it's faster, better, cheaper, you will become wealthy. And that's the reason why I created SkyTop, which is basically because students all around the world, specifically in the US and Canada, 60% of them do not have access to personal computers in their home. And then I went to actually interview my high school principal, and he said, yeah, actually, we have a $10 to $15 allowance for every student in the school every month. And I was like, you know what, that's pretty sick. And then I created a Raspberry Pi, and I streamed a computer for like $8 a month, so that students could actually have access to it. And it was basically you just had to hook it up to a monitor, and that was it. You just connect your Wi-Fi, you have a full PC.
Interesting.
So I ran that. I was on the news.
So that was you basically, you and a team. Like what was the setup? How long did it take you to go from idea to execution?
Yeah, I mean that took us about maybe like four months. Like that was my first venture on that. So it was me and my like best friend engineer, but we ended up closing it down because like we just weren't the team for it, because some ideas are too big. And what I mean by that is that there's a reason why Microsoft and all of them, they haven't done the product like that, because one, the margins are like nothing, right? Imagine how long you're running a server for, right? And then these your kids, they're running it for like 24 hours, right? And like, so you're not making much money. So yeah, we closed that down, and then actually from there, I then taught entrepreneurship. So I actually then was admitted into the graduate office at my university in Newfoundland, and I taught PhDs and master students product user experience and entrepreneurship, which is really cool because generally how incubations start or accelerators is they start like diving, who's your customer, like how do you do running reviews. I actually started off first with understanding yourself. Because if you don't understand yourself, you're going to get really confused, because as a founder, it's kind of like spotlighting everything that you always hid in your closet, because you have people running after you. You have all these things like just constantly nagging at you. And so if you have a lot of things unresolved, it just comes back up. That's why you have toxic managers, toxic founders, or, because, it's like your baby. And so, for example, if you had trauma, for example, in your past where you couldn't control a specific situation, your parents or etc.,
Yep.
Like it comes up in your company actually, because you're like, oh my god, like, you know, this person's trying to, you know, affect the way that like you're getting that trauma you felt when you were a kid back into your company, and then so actually you lash out, right?
Yep.
And
Well, most businesses don't have a business problem. They have a like a founder or CEO problem reflecting in the business, right? So
yeah, yeah,
if you look at like major bankruptcies, it's usually it's actually surprisingly not about the actual business and the mechanics of the business, but usually
yeah.
something related to the decision making or the past trauma of the founding team or the founder himself.
Yeah, and all founders actually have an issue with this, so it's not specifically
Yep.
like, oh wow, like we solved it. I mean, this is one of the reasons probably why AI an AI CEO would probably make a lot better
Yeah.
decision around
Unemotional. I agree.
emotional. Yeah, and it goes back to the exact same point you said today about how price action affects interest, right? Because
Yep.
obviously, if price is being affected today, then I mean, my emotion is going to come up and then peak, and then that's why I'm going to have interest in
Yep.
actually looking at the show, etc. But so that is basically like, and this can go on for a long time. Actually, I do
Yep.
plan on looking to build a course called Zero to Billions,
Hmm.
because basically that's kind of like the path I took in terms of like, I didn't know, I had to self teach myself a lot in terms of the product management and the technology, etc. Because we all you know, go down a specific path, and I always wanted to become an engineer, but I never chose that engineering path. And you know, my family comes from a very heavy background in business, traditional
Yep.
business, right? Hotels, real estate, agriculture, etc. And that's where I thought I was going to be. But what my passions lied in was always in computers. Like you'd always find
Yep.
me like gaming, playing on a PC, trying to like solve problems, and you know, math stuff, and you'll naturally get drawn into something that you do every single day, right? That's how where you find your passions.
Yeah, no, I agree. So going from that to now building in crypto, when did you make the jump? First of all, why? Because it's a very different space to build in. When did you decide that you wanted to get into more crypto and Web3?
Yeah. So as I mentioned, when I was teaching the cohort of graduates, so I was working with the Canadian government to
Yep.
basically help keep the, like, I guess the knowledge pool of PhD candidates or master candidates in Newfoundland, because what would happen is because the
Mm.
education was cheap, they would fly away right away. So in
Yep.
our program, entrepreneurship training program, ETP, we worked with the COA government, in whereas we had to try to get these people to create businesses here, and in
Hmm.
Canada, in specifically Atlantic Canada, they had a lot of programs. Like they'll pay like parts of the salary, give you grants, all this.
Mm.
And so
Interesting.
my program, I basically, it was like thesis to startup. So it was like
Yep.
these people are working on really cool shit. And so how do we turn that thesis into a minimum viable product and into something that could be backed, venture backed, and then keep them here, right?
Yep.
And one of them actually wrote something about blockchain. And like at that time, I was into stocks. Like I invested into that AMC thing, you know, before
Yep.
like it became big on Wall Street Bets. Like I was just like
Yeah.
looking,
Yeah.
love trading stocks.
That was a
But
crazy, crazy bull.
yeah, until I was like, man, like this is super manipulated. Like they literally turn off the buy button on the
Yep.
Robinhood. I was like, holy crap, I'm not trading stocks ever again.
Yep.
Um,
Yep.
and that time, like when I read the blockchain white paper, I was like, oh, actually, this crypto thing doesn't sound like a scam. Like everyone always says like this
Mm.
is a scam, but it actually makes a lot of sense now. And I like dove deep, really deep into that,
Yep.
and that's when I decided, like after that cohort was done, I you know, I just was like, okay, I don't want to, you know, teach anymore. I want to actually go back into this. And
Yep.
that's actually restarted again, and then created my another project called Masma, which is basically a crypto super app. So
Okay.
I was basically working on account abstraction, DeFi stuff, liquidity pools, like, you know, cross-chain swaps, but like having a universal experience that felt identical to, like, I don't know, it's just like a, you know, to WeChat or like a PayPal. That was like 3 years
Yep.
ago. Um, and then basically, this is also a really important thing when you're building, and what I realized quite late is that specifically for people who are not technical founders, is to find really great partners. and not specific. Like there's like a little bit of alpha as well if you're a builder, is finding people who have an agency. Like, you know, make your co-founder someone who owns a dev agency.
Yep.
Oh my God, you will unlock unlimited potential, right?
Yep.
Because what happened was I started working with a lot of people who had like this I guess extra dev power, right?
Yep.
Once you
Yep.
build a relationship with them, like you can actually start building things very, very quickly, very, very fast. Because I find a lot of specifically when you're working, like if you're building your own team, it's very slow. Nobody knows like each other. You're just putting them together. There's no synergy. But when you work with a dev agency and like someone that's actually your friend, like they are designed to deliver, and you move them quick. And so from there, building a lot of AI applications, we built like, I don't know, like just on the side as well for other companies, like 50 AI companies we built for, like 50
Was
AI
this Web2, like non-crypto or crypto apps?
it was mixed. It was a mix.
Okay.
But then from there, where DePIN came into line was that we realized that a lot of AI companies do not need GPUs, right? So like if you're looking at all these big DePIN products, they're always trying to sell GPUs. But the example I give to people would be, would you right now buy a Ferrari to go, you know, take a one, you know, I don't know, 5-10 minute drive one time to, I don't know, restaurant or hotel? You wouldn't. You take an Uber. So what we realized was like, you know, like in all of our AI companies that we're building, like we weren't actually using any of our own clusters, and a cluster is a bunch of GPUs in a that basically is like the Ferrari engine for your AI application. Yeah. So we were using APIs. So we were like, actually, like, you know, there's actually something interesting here, because the servicing part, right, is missing. So at DePIN, we were like, you know what, let's make a very, very big Ferrari engine with like all like, you know, 40 APIs for every single product that you could ever use. And also as well for other AI companies, like we can come in and say, hey, what's your AI product? And then basically take that, like their template for their AI, bring it into the Ferrari engine, and then also service it back to them out of the box. And then now they have the price of like that Ferrari, whereas they wouldn't have normally, because if they wanted that speed and cost per use for their product, you would have to buy their own cluster, but it wouldn't make any sense, because they'd be like, okay, well, it costs $5,000 to run this a month right now. We're only using like $100. Maybe if we get like, if we're using enough, getting enough demand, we can offset that cost. So like we service that completely for them. But not only that, but that all the DePINs are really hard to onboard. So for example, like, you know, if you use IONET before, right, connecting your GPU is really, really difficult. Like there's a multiple different steps. And so for us, we were like, okay, well, we need to simplify that. So then we basically re-engineered an application that like skips like 5 steps that they do. And it's just one simple desktop application that then like literally tokenizes your whole computer. So all the resources are like from one click now available for the DePIN cloud, right? And that DePIN cloud is that Ferrari engine. So now we have all these people all around the world providing to the Ferrari engine, and the Ferrari engine now services all these AI companies, or also rendering companies as well. So that's kind of got to that where how DePIN was initially formed. Is like, well, we want to have our own cloud that's like super fast, super scalable. We don't have any of the problems that AWS has, where cheaper. There's no like lock-in for it. It's very flexible, and we can service all the companies that we're building. So like every single time that we now are like, okay, let's build something AI. Like we know we need to use DePIN cloud for that, and that's basically why we built.
When did you start that company, DePIN?
Yeah, so DePIN, we started it about a year and a half ago, a year and a half, 2 years ago. Completely self-funded. So like we never raised any VC money for it. Actually during that process, while we were actually building the AI companies for other people, we were just like actually utilizing our own stuff for those clients. Because we didn't want to rent on AWS, or like, you know, it was just a lot easier to like launch a template onto DePIN and then power those solutions. And we kind of did it like sort of by ourselves a little bit at first. So we built this as an internal tool, and then it kind of scaled, like, you know what, we can actually turn like, and then the DePIN started to happen a little bit. I'm like, oh, yo, you know what? Like we have this servicing tool. Why don't we connect people to now be part of that? that horsepower for this servicing tool. And this is a great idea because all the DePINs right now are just a DePIN. They don't have any servicing. You only just rent a GPU. You only rent a GPU for them. And like that's an issue, right? Because no one wants to buy GPUs, as we said. And not only that, their GPUs are like, they go like super decentralized. And I'm not the type of dude that's like I need to decentralize everything, like even my even my toilet. For me, the essence of what blockchain and crypto is more of like a tokenizing ledger that allows me to track things, right? Like not specifically put everything. So we're sufficiently decentralized, and this has actually helped us a lot because we're able to use servers or like resources around the world that are not only decentralized. We can also use enterprise ones that have the speed, the cost, and as well the performance of AWS. That's actually one of the issues transitioning into DePIN, is that like when you use their GPUs, the latency is very slow because it's getting pushed secondary kind of verification process.
Who are some of the biggest competitors you guys have, specifically for the services you offer?
Yeah, so I mean, for us, it's not specifically because we do multiple different things actually. Like DePIN is like a super.
Are they blockchain based, like crypto based, or non-crypto based?
It's a mixture. So like on the Web2 side, you'd have Vast AI. They do just the GPU rentals. And if you're on the GPU rentals itself on the decentralized space, it's IONET, Aether, Akash, Nisana, Hyperbolic, those kind of players. They only do GPU provisioning. They don't do servicing. Akash kind of does a little bit of servicing in terms of like providing out of the box templates for stuff like that to run on their GPUs. But not all of them actually provide like fully usable APIs or like kind of grabbing your AI product and then kind of giving it back to you as an API, basically, right? So then you have the price of an API without actually having to buy that Ferrari. But we have actually 3 enterprise products. We have that AI GitHub. So AI GitHub is basically that servicing. So it's kind of like traditional GitHub. You come here, you put your code here, and you run your product, right? You would connect to a server like AWS, and then run code on GitHub, and then you get your product.
And this is again like non-crypto, like not necessarily crypto projects, right?
No, and that's exactly why we wanted to design our company. It was like, okay, I don't even want the word Web 2, Web 3 being thrown around, right? Like, who cares, right? The objective of using emerging technology is to improve people's lives. Like we talked about, you need to improve 10,000, 100,000, 1 million people's lives. There's a lot of people in Web 2, right? So how do we utilize Web 3 technology, which is the efficiency of transactions, efficiencies of tokenizing and allocating resources, which, by the way, a lot of DePIN products are wrongly classified. So what does this mean? There's actually two terminologies actually: DePIN and DREN. People don't know this. So DePIN is a decentralized physical infrastructure, whereas a DREN is a decentralized resource management system. Okay, and so companies like HiveMapper, Helium, these are real DePINs, whereas they have a non-fungible device, which is their antenna, right? Which then they have a bunch of these non-fungible devices that bootstrap a network that has not been existing right before. So they're bootstrapping a network, which is their.
And that's DePIN for everyone.
Yeah, that's DePIN. Yeah, but then there's other networks that are more DREN, so decentralized resource managements. Okay, so for example, we're not like I'm using a bunch of server farms all around the world, right? And we are efficiently managing those resources because it's like cross-chain, right? You can't mix 2 tokens on 2 different chains. But if you have obviously the smart contracts to enable the ledger system of them, you can now allocate them very efficiently, right, on a blockchain. And that's basically what DREN is. So generally, Akash, Aether, IONET, all those guys are actually DRENs. So they're actually not classified, but it's more of a narrative thing, right? Even with DePIN, we're more DREN.
So you didn't raise anything from VCs to launch this, right? You said
no. So
what was the reasoning behind that, around that?
Honestly, the reasoning at that time was just that we had excess funds, and we didn't really need to raise money to kind of build up an MVP for it, or etc. And it was really good for us, actually, because in my previous ventures, it's like I like going into a conversation with leverage. So obviously, when you go into, and now actually we were incubated by ChainGPT, and it was like insane our raise. Like when you go into like a room, whereas you have a product, you have specific customers, and you're like, hey, this is our competitors, and they're in $1 billion market cap. We have a product similar already working to them. We then, when raising for our IDO round, and we haven't fully closed all the IDO round yet, but because the IDO only gets launched when PG is closed, but we were oversubscribed by 8x. So we're actually right now, the FDV is currently at 5 million. So it's a very low FDV. Generally, we put it low because it makes people interested. And when you change GPT, the launchpad valuations are lower so that they can bring a lot more users in, blah, 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 blah. But yeah, so we over raised. So we're still kind of managing that process right now and selecting the right people to put on, and giving people really small tickets. So it's been kind of more tedious than it was than just grabbing a big ticket. But yeah, I mean, is there a specific question that you would have?
It's always interesting to know who bootstraps and who goes out and gets funding. Two very different business models. Nothing wrong with one or the other. I'm the majority of mine, I've always bootstrapped everything because that's more in my DNA. But it's interesting. I completely agree with the fact that you have a lot more leverage if you have something that you have built that you can show that has a few hundred, a few thousand users. It could be even 5 clients, doesn't matter. Depending on the size of the business or the industry, than going in with a pitch deck. It's just a very different conversation, and I'm on both sides, right? So I'm private equity on the Web2 side, and VC and venture builder on the crypto side, and you just have a lot more leverage when you have something that's tangible.
And that goes back into, if you want to actually realize this and actually do it yourself, is when I went back, it's about finding smart partners, right? So you need to have the resources for that to even bootstrap. It's impossible to bootstrap if you do not. And resources does not specifically mean to be money. It could be also human resources, and that's specifically
talent.
Yes, talent. And so if you find that, you're good to bootstrap. When it goes down the VC route in crypto, obviously there's many different routes, whether or not it's the community VCs or traditional VCs, etc. So for us, we had a mix of both, and I mean, we'll see how that one plays out. So the differences between obviously community VC is like a VC of a bunch of small angels, and they put micro tickets to the project, whereas a traditional VC is more so they have these very large LPs. They put it into a fund, and they're more institutional, and they're less degen, I would say. So obviously the community guys are more degen, but you're now getting hundreds of people with smaller tickets versus one entity with a large ticket. So it helped then distribution, I guess, a lot better. So
I mean, it's depending on one thing that that we noticed in crypto, it's so different to Web2 in the sense that you're so dependent on the actual market. Forget about the product or the industry. Just where are you in literally how you the way you structure your tokenomics investing will affect who even looks at the deck, and where you are in the cycle, raising the same amount with the same vesting today versus a year ago, very different responses. So it is much more dependent on the cycle, the crypto cycle.
Yeah. I mean, so obviously it's kind of like, I don't know, yeah, it's very weird. It's like kind of like your tokenomics and the way you enter the market is like shape shifting all the time. It's like a puzzle,
Yep.
right? Like
Yep.
what key fits that specific puzzle, because sometimes it could be a really big meme cycle, which then if it's a meme cycle, you need the low LTVs, you need higher unlocks, right, for on the TGE, because you're now competing against other opportunities. So it's more so you're making yourself attractive to the market, right? So generally, if you're like, back in the day, you could have high FTVs because there was a less amount of products, right, and different outlook on the market. Whereas now, or like previously, like it's more like it's like like it's kind of bearish. Everyone's like losing all their money. There's a shit ton of meme coins coming up. It gets really competitive for you because you need to then like give up a little bit more of your tokens, give up a little bit more of your vesting periods and all that stuff. But you also need to keep in mind that it is not a super big deal, because as long as you're good with treasury management and market making, when those tokens come back down, like you can actually rebuy them and you're buying back supply of your own company, right? And so but this also goes back into if your product has a really good token utility. So for example, not all do, right? Some of them are kind of like, there's different tiers to them. If it's more like a candy, like a want, like, oh, okay, cool, like I want to use this product and kind of token gate it a little bit and etc., right? Whereas some products that are required. So for example, like you cannot make a transaction on Ethereum if you do not have Ethereum. Very strong use case. For DePINs as well, they have decently good use cases, because you're tokenizing people's resources, right? Without that, you are now putting all these computational things that are happening on a ledger that's not proven, which means you can lie about the work that has been done. It's kind of like blockchain of work, right? So there is utility there. And so for DePIN, our token, by the way, is DEPIN, DePIN. And for DePIN, you have this utility token that is used for like traditional stuff, staking to validate the nodes. Also as well, kind of doing like it's kind of like participating in nodes, as we'll have our own servers which you'll fractionize, you get rewards back from, and as well having your listing price of your resources like priority, right? So it gets used more. One of the things that we were like, we don't want to use our token for the resources, and you'll actually see some companies, they just use a stable coin. And I'm like, why do you stop there? So actually, we have our own stable coin. With DePIN, you have, so a company A comes in, they need $1,000 a month for resources. Okay, you buy $1,000 of DePIN, but you wouldn't want to hold it because maybe tomorrow it's like worth $800, and you're like, oh shit, I don't want to use this ever again. Actually, with us, a company comes in, buys $1,000, and they can burn it, which obviously reduces
of the token.
Yeah, so they would actually burn the $1,000 in DePIN token, and it would go into a DePIN stablecoin. Because this now, and it's backed by USDC, so it's very basic, is that users are now forced in the demand, like accrual cycle, to obviously always buy DePIN, burn it, which reduces supply, which then increases like less tokens being pushed into the market, which will but then that stable coin, they have now $1,000 forever. So like the traditional Web2 users, and they won't really feel that flow. They'll be like, okay, activate for DePIN. They're like, wow, this is amazing. But like they're bringing buying pressure to the token. And then from there, when they use one of the resources, so for example, the GPU or CPU or server, IP addresses, VPNs, etc., we give them a redemption token. And the redemption token then reused to add supply back to the DePIN token, allowing them to then either increase their stake into the servers to get passive income, to increase their usage, like to get their GPUs used more, right? Or whatever. So it's a nice, beautiful system. And that's how you should be building your tokenomics models. It's like, why does someone come to buy your token? So a lot of these products in other DePIN space, like they're just like, okay, add USDC, and that's it. And you're like, if I'm just adding USDC, why do I need to buy your
Yeah,
token?
tokenomics are very rushed in many cases.
Very rushed. And so those are the kind of things you need to think of. So
Yep.
then, for example, you shouldn't care so much in terms of like, it's like you're just getting pros and cons when going to the market, like advantages or disadvantages. But at the end of the day, if your tokenomics are done beautifully, it shouldn't matter. Specifically for
Yep.
DePIN products, we don't care if the market is down. You're still going to use ChatGPT. You're still going to use that image generator, right? And we see the world where it's going to.
Yep.
And that's why I wanted to build that course 0 to a billion, is that people are right now already vibe coding. They're vibe marketing.
Yep.
Right.
Yep.
And so the next generation of children, or like, I guess our next generation of whatever entrepreneurs, they're going to be self-sufficient in terms of launching their own startups 100% by themselves. And we see this actually with history, because if you look 20 years ago, you're in the dot-com bubble, right? It would take you $75,000 to launch a website, right?
Yep.
And
Yep.
like a product, it'd be like insane. And so when a VC would invest into you, right, there's only 5 players. You got only the Microsoft, you got the Apple, right? And actually, by the way, and this is an example, Adobe was a PC maker.
Yep.
Except Adobe could not compete with Microsoft and Apple. And I'm pretty sure Apple was like talking to the CEO of Adobe. He's like, dude, like you can't compete with us. But what you can compete is building a software that can be making documents identical on Mac and on PC, which then Adobe, their VCs were like, yo, like, we want to just do Adobe software.
Yep.
And that's how they pivot. Like, you had time to pivot, right? But then what happens is 10 years later, you got Shopify, you get all these SaaS tools that are actually helping you achieve your job faster and better. Like back in those days, there was no SaaS tools. Like, you had to do everything yourself. And it actually increases the amount of competitors in the market. So you now have 100 competitors. Like, instead of 5, you have 1,000.
Yep.
Because anyone can just start launching and all that stuff. And then what happens now is globalization gets a lot more accessible, right? And so now you're having access to resources across the world. So now instead of that website costing product costing 100,000, 200,000, it's like now like 50.
Yeah. Everything trends to zero in tech cost over time.
Yeah, and that's exactly where we're at now. Is that with AI, is that no one gives a shit about your product anymore. No one gives a shit about your IP, your product, or your idea. It's actually traction. An investor wants to buy your traction. And so in the future, what's going to happen is you're going to get these, and I'm already seeing it now, these hyperscalers that are able to launch something quick.
Yep.
And then as well, now using AI with all those specific outreach tools to see, well, how much traction can I get?
Yep.
Well, actually, if you do not learn in that area of how do I actually utilize AI to now build something very quickly, like a minimal viable product, and minimal viable product is very easy to understand because, like, product market fit. People kind of like misunderstand this a little bit, because like, what does a product and a market fit mean? Is that if you think about an X and Y axis, right, in terms of, I guess, users and over time, and there's a diagonal line, right? So if I have 100 users, 1,000 users, 100,000, million, whatever, it's going directly like this. If you start to bring in 100,000 users, but if you start to like kind of, if you can kind of stay next to the line, you have product market fit. But what happens is if you have a lot of users coming in, but then it kind of like curves, right? So the more users you use in, they kind of churn. You do not have product market fit. It means that your market is not really meeting the product
needs of the market. What's the vision for you with this?
So for DePIN, our vision is basically to be the place where anyone can go to now start actually being able to build, right, all these AI applications and not have to get locked up with anything. You'll have all the tool sets, all the APIs, all the power to actually launch and control, empower any AI company, like product in the world. I also forgot to mention
any kind of mini SaaS, any kind of AI tool that they want to launch.
Exactly. Yeah, you'll be able to do it at an insanely low cost scale, very easily, manage all of it. That's why we call it AI GitHub. We also do rendering. So we're actually able to, we actually compete with render. We can actually render hundreds of hours of 3D assets in less than 30 minutes. But it's called AI Studio. And this is one of the things, like, I was talking about, like, DePIN will be a place for founders to actually be able to like launch a product and scale the product. We have a product in AI Studio, which is really, really cool. So not only will you be able to create ads, create AI influencers, render stuff, we have a distribution platform. So all of our members, we have right now 800,000. We're soon going to be launching our ambassador program where they all connect, and this is already done. They'll create social media accounts. So for example, right now your account is, Matthew, blah, 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 right? You'll have 800,000, 200,000 people create Matthew123, Matthew 5, Matthew Apple. And then we have all your content you create will get pushed out automatically to over hundreds of social media accounts, X, YouTube, LinkedIn, Reddit, Instagram. And so that becomes your automated outreach platform for your ads, which is Vibe marketing for your AI startup that you just put together, right? And
how are you fighting like account authentications? And
they're all real people. So we call it, like, it's kind of a new term I kind of put together randomly. I call it like SOREN or SOPIN, social media infrastructure. And so people will actually follow a flow and they will actually click it and it'll say, okay, create your own Instagram account. So that individual user in that specific country will create their own Instagram account and then connect it to DePIN, which is identical to a scheduling posting tool. When you
yeah.
But we own the buffer. Like we re-engineer a lot of applications and put it into DePIN and then innovate the process and how we use it. And so that's already done. And anybody will be able to create a campaign, by the way. So you just put you buy $5,000 DePIN token, 10,000 DePIN token. It's like, now it's like an airdrop, like Galaxy. People rush in, create social media accounts. We control
you can create your own quests in a way.
Yeah, you create your own quest, but it's just like it's like an ad, like Facebook ads, right? Except now you'll have organic ads being pushed, and there's also influencers. We can actually generate 100,000 new faces, all talking about your product, saying like, "Oh my god, this is amazing!" And generally, you would then push your call to action, right, or your offer for your product. And if your product matches the market, you will get customers. And then from there, you'll get investors. And we also have AI agent. So AI agent also, you'll be able to code any workflow. So for example, you're doing your business. You're like, oh my God, I need a payroll. I need a X, Y, and Z, whatever. We will automatically work out a whole workflow for you with an AI agent for your business. And that all gets powered by the AI, our DePIN cloud as well. So
is this all built, or is this part of the roadmap? Like what phase are you at now?
Yeah. So all built. So our AI GitHub is now being rolled out with the APIs, and we're just kind of we're actually going to be powering ChainGPT's infrastructure. From there, we're waiting for our TGE. That's basically it. Because once TGE comes out, like, remember that token gets burned, blah blah blah. That's good to go. You can rent GPUs, and also as well our APIs from AI GitHub. Pretty cool. The rendering studio, you can also render. Rendering's already done. Also, the content distribution is already done. But content distribution is only available for us right now. We're going to be using it for our TGE. But because I haven't built the version of it which is then commercialized in terms of a company can come in and self-serve themselves. That's our next step, but that only takes me maybe 2-3 months to do. And AI agent that's being built right now will be done about in 2 months, 2-3 months. So so that's kind of a lot of cool shit actually happening in DePIN. But that's our vision. It's that we're trying to service those customers. That's like the next, that's what I believe. You're gonna have everyone's gonna become like an AI freelance SaaS founder. Right?
It's already started for sure.
Already starting. That's why. So we saw that kind of trend, and we want to provide the tools for them. But this is the cool part: is we have all the tools for you to now build your. We have all the tools now to build. We have your dev platform, we have your content platform, and we have your admin platform. All three. And then from here, that's like your tradition. That's our servicing platform, is that we want to provide rewards back to the community, because the community now powers these builders. Right.
And visibility and
exactly. It's a very beautiful system actually. And no product product. No DePIN product on the market is doing that. We're the only people on the market, and I haven't even seen anybody talk about that vision in terms of the next future founders, and we're literally building for those people. Yeah,
very cool. We have about 5 minutes left. I'm curious to hear your thoughts on, first of all, any closing. We'll link everything around when we post this on socials. Curious to hear your thoughts about the market this cycle. That's a question I ask every guest at the end of every show: is what do you think of this cycle? What's where are we going?
Yeah, I mean, obviously the market is really weird. Generally, I feel like people are becoming more used to it because when the market was still very fresh and people didn't understand it, people were buying like everything in NFTs, this and that, right? And they didn't really understand why they bought NFTs. And back then it was like, what's the utility of this token? Like I remember back in the day, like if there was no utility, no one would buy it. No one would buy it. But then what happens over time, and it's actually just a bell curve thing, right? You have the like the evangelist, and then the blah 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 blah. When you cross the chasm, is that you have more of the median users, right? The median users don't give a fuck. Like, you know, sorry if you can't screw. Like they don't care about your morals or values or your like whatever. Like they're not the people that wait. Like the evangelists are the people who like just bought Bitcoin back in 2012. They're the people like the iPhone users that wait out in line because like they want the next iPhone. They are in love with it.
Yeah, the maxis, yes, 100%.
Right. And that happens in every market. And so we're actually now crossing the chasm, right? So when you cross the chasm, you now hit the median users. They don't care about your morals. They don't care about tokenizations. They don't care about decentralizations. They only care about money, right? And that's why you're starting to see the meme cycles happen so much, because they're just chasing money. And it's not a big specific problem. I mean, you know, money makes the world move around. Is that same thing with stocks? Is that I find it's now generalizing. It's more you're selling hope now, hope of financial freedom, which is exactly what people buy stocks, which is to retire. And you'll start to see now a crossover of both of those with the exact same thing with stocks and crypto. And so generally, that is now kind of like finding an equilibrium right now, right? Because you're people that are, you know, so it's really hard to tell actually. But generally, I do think that people are going to stop buying memes in a way, because like people are realizing, okay, well, there's actually no utility in here, and if I want to plan for my future, that's not going to be it. And you're going to start equalizing back into understanding that a product makes sense and this is good, right? And that's where I want to invest, because I see a future in it. So I do believe it will equalize back into that, just similar to why people buy Microsoft, why people buy Google, right? It'll transcribe into crypto. It's when the market's shaky and like everyone's like moving all their funds to like meme coins and stuff like that. You don't know how to do that because you're confused. Once the market gets bearing, they will, but then you'll have the outliers as well of meme coins that do go to 100 million because of the right backing and the right situation of the token. But I think that won't happen as much anymore, right? Because people
got it. Okay.
Yeah, because now you're getting like a flood of tokens, so you don't know anymore. Back then, you only had 5 tokens, as we talked about.
Very different space.
Very different space. You have 5 tokens of meme coins. You have just the Doge, with whatever. But now because pumped up, as we talked about with the Shopify. It doesn't matter about your idea anymore. No one cares about your meme anymore. It's about the traction. And traction is on your distribution power. So I do believe,
I agree. Distribution is the moat, current and future moats.
So I think the meme coin thing is going to be dead now because of that, because now it's too much. It's impossible to distinguish, and because of that, people are going to start going back into the real projects that can distinguish themselves with real value. So I do believe that will be what happens.
Cool. Very good. Any closing thoughts? We have about a minute left. Again, we'll pin all links, etc. to DePINed. No pun intended. But give us like a cool closing statement.
I mean, so in terms of, I don't know if I guess I'll show DePINed is that we'll be planning our TGE very soon. So there's gonna be really a lot of exciting things with DePIN coming up, and I do believe we're gonna have an amazing TGE. Like everything we have planned with ChangeGPT.
So many projects are waiting for TGE. It's gonna
Yeah,
be
I
TGE
know.
season soon.
It's gonna be TGE season soon.
Yeah, yeah, yeah,
But
yeah.
to give you guys an example, like ChangeGPT, their last incubations were Cookie 3, GT Protocol, Bubble Maps. These are some like pretty Binance listed tokens as well. So there's alpha around there, and so yeah, I mean, right now you can already start earning our token. So I mean, not token points. So our points actually, you can go on depin.org and download our
Yep.
widget, and our widget competes directly with Grass because we're
Yep.
mining your bandwidth. That's the initial points right now for the airdrop that we do plan laterwards. So you can get started with that
Okay.
first, and then when we do TGE, we will then have a desktop application, which is where you'll earn meat of the rewards. We can't launch a desktop application until we have the TGE out.
Yep.
So, yeah.
Very good. We'll link everything. Thank you for being on the show. I have to jump. It's been a pleasure. 600 people. Like I said, Bitcoin's back up. Views are back up. It's pretty wild how correlated it is.
Yeah, we also just posted in our community as well. So I think that we
nice. Very cool. Very cool. Yeah. So we'll show some love to DePINed. And no, I mean, curious to see how things go with the market, of course, with you guys. And we'll have you back on the show probably in a few months once we've gone through like this wave of TGEs.
Yeah. Appreciate you.
All right, perfect. Thank you guys. Thank you for watching, and we'll catch you on the next show. Hey, thanks for watching. If you got value from this episode, you're going to love what's coming next. So subscribe now. We drop new episodes and videos several times a week featuring power players, market movers, and insiders from the financial world. And if you want access to deals and insights we only share privately, hit the links in the description, and we'll see you on the next show.